Hello, everybody. Welcome back to the channel. Welcome back for another video. Yeah, hope you're all doing well. Hope you're all having a great day. Hope you're all having a good morning, afternoon, and or evening. Don't forget to subscribe to the channel. I know, crazy, right? Don't forget to subscribe to The Modern Investor if you haven't done so already. Brand new video every single day. Like actually every single day. And without any ado, that is further. Let's jump right into it. I would sit here and I would sit here and pretend to you like I'm supposed to be shocked at this, but who would have thunk it, right? Making free money is jumping into the news more often. I am all but certain next year is going to be basically about staking, stable coins, and tokenization. How do I know that? Well, because we've been hearing about it like every single day for the last couple of months. Tokenization is going to take over quite rapidly. It is just, if you will, digitizing assets, putting them on chain. It increases the literal total value locked on chain by a lot, potentially by trillions in the coming years. We had a lot of conversations about stable coins. Everyone's launching their own central bank digital currency next year, and it is going to take the world by storm. The other thing, I think this is the fourth time. I think this is now officially the fourth time that we're actually hearing about this. And as I have assumed, ow, my arm. I touched my arm. Okay, there's nothing there, thank goodness, but I touched it and I was like, what was that? Okay. This is now the fourth time that we're hearing about something like this. In the last like few weeks, even. There are going to be a lot more of these, and we are going to be hearing about them potentially forever. Oh, no, actually, I'll give it like a good year and a half or 2 years. I think once this kind of solidifies and becomes quite normal, it's kind of like before we got staking on Ethereum. I mean, it was all anyone spoke about. And then we got it, and people spoke about it for a good 6 months, and now it's just like a core feature of the actual protocol. So, my friends, here we are again in a very short period of time. Passive income is the name of the game. It's what everyone wants, and even crazier, it's going to be a lot easier to get than many people actually believed. Someone by the name of Michael Egorov, Egorov, the creator of Curve Finance, has unveiled something called Yield Basis. Yield Basis, a decentralized protocol designed to bring sustainable yield opportunities to Bitcoin holders while solving one of DeFi's most persistent problems called impermanent loss. The idea of Bitcoin making yield this year has really taken off. Who knew that it was that easy, that we could have so many protocols being announced and launched and thrown out there at the exact same time? For it to be sustainable, as I've gone over before, many people who enter crypto quickly are looking for fast, easy money. We know this. A lot of times, there are a lot of people in the last few years who got into the market. They see that certain coins years ago who initiated, activated, or had staking. Many coins like Ethereum, I think Ethereum's staking yield is like 2.3% or something like that. Other coins were like, we have 12%. And if you don't really understand like dividends, or if you don't really get higher yields tend to be a lot more shaky, People were throwing their money into, I mean, many of them were scams. People threw their money into them and the whole thing kind of fell apart. In order to be sustainable, you kind of need lower levels. Many dividends, like healthy dividends for stocks, 2.7% and 3.1. By the time you get to like 5 or 6%, if you look into like the company's history, it becomes like, ooh, like, okay, something's going on. They're trying to incentivize people to essentially hold on to their stock. So this is why we've been getting a lot of like the 1+% numbers as of late. And this is why I said, if you can offer 2%, you're probably going to be at the top of the pack for a while. It says for years, Bitcoin investors have had few options to earn meaningful on-chain returns. And this is more of this is a new age kind of thing. Old school Bitcoin thinking had nothing to do with yield. The idea of Bitcoin, it's meant to be like the new dollar. When you have your dollar like sitting in your wallet, you're like, make me money. No, like it just is what it is. Bitcoin's inherent power is that it is decentralized and deflationary. It is not controlled by any one entity sitting in a chair saying print more money. And it doesn't fall under normal fiat currency rules in that it isn't inflating forever. The amount of Bitcoin always becomes lower and lower. It is a very rare asset. This idea of like Bitcoin needing to do something has been around for like 3.5 years. It hasn't been around for a while. Michael Saylor, once again, called Bitcoin boring last year. Okay, ha. The other part has to do with like people looking for a way for Bitcoin to do like jumps and tricks and to, like produce like dancing on stage. It's just not what Bitcoin is actually for. I mean, this is where the direction is going, but people keep presenting this as some kind of like Bitcoin's had a problem for a while. No, there was no real problem until someone said that there was a problem and that they could fix it by creating a new protocol. And now everybody wants to create a brand new protocol until one of them ends up taking off. It says, for years, Bitcoin investors have had few options to earn meaningful on-chain returns. Lending platforms typically offered under 1%, while liquidity pools expose users to impermanent loss whenever tokens price diverged. Even under favorable conditions, yields rarely exceeded 1 to 2%. Yield basis aims to rewrite that equation by eliminating impermanent loss altogether, allowing deeper Bitcoin liquidity to flow on-chain and creating yield opportunities attractive enough for institutional players. I'm going to say this nicely. Everyone in this space tends to promise something big. I know this sounds wonderful. This, in theory and in practice, this sounds, wow, can't wait for this to happen, like that kind of thing. But and I really give it really. When crypto exchanges launch these things, thumbs up. That's when, it will be regulated and everyone can kind of jump in. I think it's going to take about a year for us to see some people kind of like stumbling. A lot of coins years ago used to launch, as I stated, thousands of times. We've had tons of coins launching over the last nearly a decade. I'm faster than Bitcoin. I'm better than Ethereum. I can do this better. My staking is this. Remember IOTA? IOTA had the Tangle. The Tangle was supposed to be the newest iteration of a blockchain. And I've always been lightly skeptical, but I used to tell people, I was like, watch out for new coins. No, it's new. It's shiny. It's amazing. It's going to be the new Bitcoin. And then we started having a lot of like developers coming into the space being like, oh, that doesn't really work. That's going to collapse. Something seems wrong with this. And a lot of these things do. So, missing out on a year isn't going to like stop or slow anyone down. But a lot of these protocols are launching at the exact same time. The only ones I would, and I'll say it this way. You know how Kraken and the other protocol that we heard about have something where like it's non-custodial. So as long as you aren't required to lock your coins up somewhere into something. And you have like full control over it, like the one on Kraken. Not advocating for Kraken. I don't really care for Kraken, but it's just more of a like you having control over it and you still getting money. That's a thumbs up. That's a really good, anything that, talks about liquidity and this and so and DeFi and locking it up. Be very wary, especially when it comes to your own money. Like really, 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 really. To manage adoption, I mean, it is very new. To manage adoption, the protocol is debuting with 3 pools, so not a lot of staking pools, capped at only $1 million each. Igorov says the model borrows heavily from Curve's battle-tested design, incorporating a vote escrow system, VEYB, for governance. Token holders must lock YB to participate in governance and receive protocol fees, which can be distributed in Curve's CRVUSD stablecoin or in wrapped Bitcoin. Listen. Cool. This is another protocol, but this is probably something for the big boys. The things that are going to take off for retail investors, for me, you, everyone else, is going to be like very simple. You put it onto a crypto exchange, you click a button that says stake. Period. Like that's the thing that's going to actually take over. The interesting part is the speed, the rapidness at which these protocols are launching. Yeah, I told you all before, and I know you get it. And this isn't me, I'm telling you to do this. No, it's just like pay attention. Pay attention to the news. Pay attention to the patterns of everything that keeps popping up. The world of passive income is rapidly throwing itself at the cryptocurrency market. And it will not be long before a lot of you are easily staking your Bitcoin and staking your XRP. It's almost basically around the corner. That's the Curve protocol. What was this thing called? Yield basis. Awesome. Yield basis. And yeah, let's move on. Here's someone we haven't heard from in a few while. PayPal. Earlier this year and last year, they fell over themselves, letting all of us know exactly how much they loved Bitcoin. We love crypto. And I think what happened is a lot of people, and I say this because I go over news every day and I didn't see a lot of them in the news every day. They began to offer like buying Bitcoin and holding Bitcoin through them. And also, I believe at some point buying Ethereum and also holding it within your PayPal account. I think that mainly is a US thing. Maybe the UK also has it, but I believe not many other places on the planet have this kind of option. So then PayPal pivoted into this idea of stablecoins. This is even before we got stablecoin regulation. And they told people, there's a new easy way to send money around the world. It's with PayPal coin. And I said back then as well, we have enough stable coins. This desperation by companies and governments to create central bank digital currencies and call them stable coins. For all these Uber and Amazon to have rumors about creating a stable coin. No one really wants these things. The only people who want them are the people who are creating them and promoting them. We don't need an Amazon stablecoin. We don't need a Google one. We don't need a PayPal one. We don't need... There were even things a year ago where people were talking about celebrities. This is the thing. People were talking about celebrities having their own stablecoins. Why? Because if you had that coin and you wanted to go to a concert someone was having, you'd be able to pay in that coin and get a discount. If you have Uber coin, if you used Uber to get some food or to take a car somewhere, guess what? You get a discount. Nobody wants to swap into 38 different stable coins. It's completely ridiculous. So PayPal's coin launched, and it was supposed to be the new way of sending money. And like I said, the only people who really use stable coins tend to be, at the moment, institutions or day traders, like really big companies who are day trading, and they need that liquidity from the stable coins to slosh their money back and forth into. Everyone else, don't really need it. So PayPal's stablecoin, the PYUSD, is apparently going to be moving on to a bunch of other different altcoins. They're going to be expanding to Tron, to Avalanche, to Sei, SEI. I have not, I assume it's Sei, and more blockchains thanks to something called Layer Zero integration. Companies tend to do this to make their coins seem more decentralized. Every stable coin is centralized. They are controlled and created and dished out by a company. They're not decentralized. These are not cryptocurrencies. Cryptocurrencies are permissionless. So what a lot of these companies have been doing is announcing, we're putting them on not permissioned chains, Ethereum, and so and so. No, they still have complete control over the coin. They can freeze transactions, they can reverse transactions, but it's usually done at least years ago to try and really kind of seem more cool and hip. So if you like Tron or Avalanche, guess what? PayPal, you can choose to use PayPal coin instead of Tether. But once again, no one's really using those things except for institutions who've kind of cornered Circle and Tether as the coins that they want to use. PayPal's coin would need a tremendous amount of liquidity, and you would have had this if you didn't have 300 other companies looking to make their own. What would have happened in the past is that these 300 companies, PayPal would have had a funding round. These 300 companies would have joined in, and PayPal's coins would have launched with 27 billion coins. Oh my gosh, I can't believe it. But now they're all trying to do the exact same thing, and these things are gonna fail. I don't know if you knew that or were aware. This is not the first iteration of these. We've had other countries in the Bahamas. We've had some in Africa and Latin America, and other companies within the US, and JP Morgan coin is just greed. We don't need stable coins. They tell us that we need them for them because they want to make extra fees from us. If you can make sure that someone just exists within your ecosystem and not someone else's, then why would you need to be in someone, you're trying to corner the money. Facebook tried to make their own stable coin because they wanted you to stop using Amazon. You have Facebook Marketplace. You can use that. If the Facebook partnered with Uber and Lyft and a bunch of other companies who are also going to be using it. You basically stay within that ecosystem. And eventually at some point, it's kind of like your bank. If you have Bank of America, you're not really going to mosey over to JP Morgan. Like, that's basically how it is. This move, which takes place via Layer Zero's Stargate Hydra Bridge. What is that a TV show? Layer Zero Stargate Hydra Bridge? Issued by Paxos Trust Company, PYUSD was initially launched on Ethereum, later expanding to Solana and Arbitrum, and today to Stellar. With the new announcement, a version called PYUSD 0 will be available on new networks: Abstract, Aptos, Avalanche, Inc., Psi, Stable, and Tron. That's crazy. Additionally, existing bridged versions will be available on Berachain and Flow. I'm almost like lightly embarrassed for them. Those names are kind of crazy. So, yeah, cool. PayPal hasn't been in the news in a while. I know people were far more interested in PayPal actually offering like crypto services. Like if PayPal, if on PayPal you could buy Bitcoin, Ethereum, XRP, Tron, Avalanche, Cupola and all these other coins, people would really have jumped on very quick. Instead, they tried to make their own stablecoin, which no one wants. If PayPal announced, hey, you can now stake your Ether, you can stake your Bitcoin. Look at that. You can stake these coins using the Flare network and make passive income. And you checked your PayPal account and you kept on seeing more money popping up in there. This would have taken off. Nobody wants stable coins. Nobody wants PayPal stablecoin. It's like such a weird level of greed where these companies, remember years ago, the whole like blockchain, not Bitcoin? There was a really weird thing where these like some companies were popping up and they were announcing that they had created, I mean, like what were they? But they kept on saying like it's on a blockchain. It's on a blockchain, and they thought that would get us to a blockchain, and that we'd kind of like leave Bitcoin, Ethereum, and XRP. Like they just do things because they think that like these buzzwords will kind of like get us. Oh my gosh, PayPal has a stable coin? I gotta use that, guys. It's just complete nonsense. And we already know that these companies care nothing about decentralization, nonetheless us. So it just ends up being kind of cringe all the time. So anywho, we'll probably get PayPal in the news in mid 2026 when they announce you can finally buy 2 more coins or something like that. No, just join the market, like actually fully, completely join it. Let people, okay, whatever. Anyway, cool. That's the PayPal stablecoin news. Can't wait to not use that. That's going to be super fun. Well, I think that's definitely going to do it for this video. I do hope that you've all enjoyed. I do hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting. And I will most certainly be talking to you all soon. See you.